Thank you very much for joining me on the Trilateral podcast. I'm here with David Tawil, president of Prochain Capital. David, thank you very much for joining me today.
Thank you so much for having me, Max.
David, you traded distressed debt through some of the most volatile periods in recent financial history. How does that shape how you approach risk today?
So many people will say that volatility is a good gauge for risk. However, I would say most distressed investors and most event-driven and special situation investors, if they call themselves that, uh, don't see volatility as a good gauge of risk. Um, those investors are value-driven investors, like myself, and the only thing they care about is profitability of an investment. And so if an investment starts at point X and rises directly to point Y, it is the same as starting at point X, rising and falling, and finally getting to point Y. As long as you held onto that investment all along, the net profitability is exactly the same. And so, having experienced volatile times, I've learned that lesson very well. I've learned to be a contrarian in most situations. And lastly, um, to know that if there is a depreciation in the price of an asset that I was bullish on at a higher price, I may want to go ahead and take the opportunity to average cost down when that price drops because my expectation for the eventual exit is going to be much higher.
Is an industry that you need sort of a thicker skin in to be able to get past those volatile periods?
So it's either a thick skin if you're a public person or a person who is not listening to the conventional wisdom. And some managers do one and some do the other. And it's just a question of whether you are a private investor in the sense that you don't air your investment ideas publicly. You rarely engage with the public, whether it be on social media or traditional media. And so, therefore, you don't necessarily have to be thick skinned because no one's ever trying to go ahead and test your mettle. But if you're a public investor like I am, oftentimes, I will express my viewpoints on media about investments that I'm involved in. Sure, you need to have a thick skin and you need to know that you're a contrarian investor. And it's usually something that's deep down inside of you, that you can hold your own and be marching to a different beat while the herd is marching to another beat. And you're almost always that person, whether it be your taste for music or food or, recreational interests or fashion style or something. There is something contrarian about you that makes you comfortable being in that position often.
Speaking of being comfortable as a contrarian, as someone that is comfortable making these tough decisions, you were brought on to the board or to run Centaurus Energy in March 2020, 1 month before oil futures went negative. Can you tell me a little bit about what it was like on the inside?
Absolutely. It was one of the most trying periods of my professional career. As with most things that are that difficult, I am so happy for all the lessons that I've learned there. They proved to be invaluable. So, my fund, Magdalene Capital, which was a distressed fund that I founded and ran for 12 years, was an investor in Centaurus. At the time, it was called Madalena Energy. And we were the largest investor in the company. And it was an oil and gas exploration and production company that was incorporated in Canada and operated in Argentina. And even though oil and gas was not my specialty, and I'm not oftentimes investing in Canada, usually focused in the United States, and certainly not in Argentina, this found its way into our portfolio. And in early 2020, it came to our attention that the management of the company um, was not fit to serve. They had defrauded the company in a way, in the sense that they had pledged to lend the company $23 million, which the company desperately needed to satisfy drilling obligations. And the management did not have that money. The board of directors of the company didn't properly oversee and diligence that commitment by management. And we received the documentation from a different source that it was clear that management did not have that capability. And unless I did something, the company was going to meet a very bad fate very quickly. And when I say the company, I mean all shareholders of the company, not just us. And so in March 2020, as a result of the evidence that we received and a bunch of machinations that my fund made towards the company, the management of the company was dismissed. The board of directors stepped down entirely, and I became the CEO an oil and gas company, as you said, on the eve of oil prices crashing at the time that COVID bared down on the world. And I was managing 100 people situated in Argentina. And so for the first time, I was operating a company, but I couldn't see or be with physically any of my employees. And I had to stabilize a company that was under tremendous pressure because its revenue source had dried up, as did for every oil company. And I had to stave off insolvency and bankruptcy almost daily for 3 years. After 3 years, or in the course of 3 years, I was able to stabilize the company. We paid everybody on time. My employees never had a payment or a salary payment skipped. We were able to negotiate with all our creditors, all our stakeholders, satisfied provincial authorities. And by 2023, we were able to sell all the operations of the company to a local oil and gas operator in Argentina.
Running an oil company in a foreign country alone, um, did you ever feel like you'd bitten off more than you could chew?
Yeah, I would say I felt like I was drowning at times. There was just so much that needed to be done that I couldn't rely on my local employees to take care of, because they're not crisis management people. I am the only crisis manager, or I was the only crisis manager in that scenario. I'm the person that has a bankruptcy background, albeit in a different country, but distressed, restructuring. And so I really had to take care of almost everything, because almost everything at that moment was atypical. It was atypical that we were losing money on every barrel of oil that we produced. By definition, our costs were higher than the revenue, but we had to keep producing the oil, because once you don't produce oil from an oil well, it's not like turning on and off a faucet. You don't produce, the well gets shut in. You have much bigger problems, first with environmental issues, but beyond that, if you want to go ahead and resuscitate that well, it's going to cost way more money. And so you have to kind of keep it going and pray for a brighter day. And so none of my employees were in the business of trying to figure out how are we going to meet our obligations when we definitely don't have enough money coming in the door. How do we just continuously plug holes and plug holes and plug holes? And that's where I had to get involved. Plus, we had everything going on with the previous management, and the fact that they defrauded the company, and the fact that we wanted to pursue them. At the same time, we were, as quickly as we could, pursuing the eventual sale of the company. So that's M&A activity. And so all that going on all at once, while I'm first stepping into the CEO role of a company that, you know, is thousands of miles away in an industry that I'm not germane to. It was absolutely incredible.
The company has now changed a lot under your leadership. I was curious why the shift to digital assets.
So, uh, separate and apart from my activity in Centaurus, after I wound down my distressed hedge fund, I launched, even before winding it down, I had launched a cryptocurrency hedge fund. And that really is because of the opportunity set that I believe exists. Distressed assets were once a very fertile ground for investing because um, economies go in cycles. There's growth, then there's contraction, then there's consolidation, and then you start all over again. And so you'd get good businesses that financed themselves at the peak. They took on a lot of debt, um, and they couldn't go ahead and meet those obligations when there was a contraction in the market, or they couldn't refinance when rates were higher. And so distressed opportunities were abound for many decades. The central banks of the world have changed all of that now. After the great financial crisis, central banks now know that the first thing they do when there's trouble in the economy is they take rates down to zero. That wasn't always the case. For people that are young, before the financial crisis, that was not how things went. Pain was painful, and everybody had to take their medicine and make it through those painful times. But one of the things that it assured everybody of is that there would never be a trough that was so deep, because everyone was taking a measure of pain every so often, that there would never be a trough so deep that really would wipe a lot of things out. The great financial crisis was an anomaly in terms of the circumstances that led to it, but what the remedy that came from it was this moving everything to zero in terms of rates. So what that means for distressed is anytime there's bad news in the economy, rates go to zero, and effectively you can finance anything that generates revenue. And so you very rarely can find now good businesses that just have bad balance sheets, right? It's profitable business, but they didn't really think about their corporate finance and their cost of capital all that well. And they got caught between a rock and a hard place at a certain point in the economic cycle. It doesn't happen very often anymore. Rates are so low constantly, A, and then B, usually when things go bad all around, it's not like prices drop. It's more like if there's anything that is dead at that point, it's really worth burying as opposed to resuscitating. And so, sorry for the long intro to why I pivoted into cryptocurrency. Cryptocurrency, I believe, has a really long life to it, maybe eternal. But cryptocurrency is essentially the digitization of assets. You know, we've digitized in our society information all over the internet, transactions, and communication in email and text and WhatsApp and whatever else. All of those things are very dynamic. Assets are very static. They don't transfer back and forth very often. Even if I spend money, I write more emails in a day or more texts in a day or more WhatsApps in a day that go back and forth than the amount of times that I transact in a day. And so to digitize assets like value or money, so to say, or things like title or property records to anything, to a car, to a house, to an insurance policy, to stocks, to bonds, all those things are like a cakewalk if you think about it, because we've already digitized the harder things, the more dynamic things. We've already digitized those things, transactions, buying things, e-commerce and so forth, or communication. And so I made a full-blown effort to get involved in cryptocurrency. At the same time, with respect to Centaurus, Uh, you know, as I said, I'm not an oil and gas expert. I'm not an Argentina expert. I certainly know enough, way more than enough to be dangerous in both realms at this point. But I wanted to go ahead and take the company and pivot it to something that I know a lot more, a lot better. And so the company has the opportunity to go ahead and make money. So before we sold all the assets of the company, well, we stripped out the most valuable asset, which was a royalty interest in a very prolific oil field, shale oil field in Argentina. We don't do anything with respect to that field. We're a passive holder of a share in that field, a small share, but we get recurring revenue. We don't have to do anything. We don't have to put up any money. We don't have to review any plans. We don't have to answer to anybody. We just simply get a check every 6 months, or more like it, a wire every 6 months. And the question is what do we do for that with that money in order to generate shareholder value? Sure, we could go ahead and dividend the money to shareholders. That's the easiest thing to do. But when I keep saying we, it means the board of directors of the company, we think that we could do more for shareholders by doing something else with that capital. And so um, our first instinct was to look at cryptocurrency for purposes of something that would be uh, good to invest in, appreciate, and so forth.
The company is now pursuing a loan for $25 million. I was curious what you saw in the market that you view as an opportunity that you don't want to miss out on.
So the company has this royalty stream. Our counterparty on the royalty stream is the highest rated credit in the entire country of Argentina. It even has a higher credit rating than the country itself. The name of the company is Pan American Energy. It's a joint venture between the wealthiest family in Argentina, British Petroleum, and the Chinese state-owned oil company CNOOC, CNOOC. So we have a really credit worthy counterparty on this royalty stream. They are the ones that do the development of the field. And so we've been getting our payments like clockwork. Rather than waiting for this money to come in total, which will take somewhere between 10 and 15 years, is the tenor of the entire royalty stream, which will total probably about, with interest, about $19 million that we will receive. The company has in mind to go ahead and borrow a bunch of capital against the royalty interest so that we can get the capital now in order to invest it now for the benefit of our shareholders, right? Prices are lower now than we expect them to be in 10 to 15 years when all that capital finally does come in. And so therefore we'd like to take advantage of the current market opportunity.
You're a big supporter of tokenized securities, and recently it seems like the SEC would agree with you or is on the same page with you. Um, which application of the real world assets has you most excited right now?
I think that that's a layup. When I refer to that, I mean securities. It's a layup because the blockchain, public blockchains, are more secure than databases. They are um, more efficient, and they're faster. So, and they cost less. So, for all those reasons, securities, which essentially at this point are on not blockchains, but internal databases. When I sell a share of stock, it's not like anything gets transferred from my account to, say, your account, right? It's simply a recording on someone's ledger that says that stock has left my account and is now transferred to your account. It's much easier. You get rid of a lot of intermediaries if in fact it is memorialized on a blockchain. And frankly, you may not need any intermediaries in the future in order to transfer that, right? As opposed to now, you need many intermediaries. So for me, digitization or tokenization of securities is a no-brainer. But you can tokenize not only public securities, you can tokenize private securities. I think it starts to become more interesting. Tokenization starts to become more interesting um, when we start to tokenize other forms of information that until now have been somewhat off limits uh, from digitization. From digitization. So things like health records, I think, are really important. The state of California has gone ahead and digitized or tokenized driver's licenses. I think there will be more applications that will be found because what tokenization allows for that I don't think we realize is not just it feeds very well into the fractional ownership economy, right? The sharing economy. You can become much more efficient because you can go ahead and track every single item without any additional cost, right? Not only can I track a dozen eggs, I can track each single egg. It doesn't cost me any more money to go ahead and have a unique entry for every single egg that is shipped out of, a farm. The fact that you're able to go ahead and memorialize that and then, if necessary, transfer that or uh, provide the ownership as proof, you can now slice assets much more finely and they can get much more efficiently used, maximalistically used by the public at large. I think that's what we're going to see over time with things like ride sharing. I think we'll see that with usage of utilities like, um, cable and internet service, um, any sort of utility that there's no uniqueness from one sample to another. It's commoditized. We will be able to go ahead and truly become a much more fluid and efficient society when it comes to using those commodities. There will be a lot less waste.
One of the examples that comes to my mind is instead of, let's say, buying shares of an oil company or an oil tanking company, you could buy a fraction of an oil tanker's cargo on one trip, basically. It's say if you're expecting that specific trip to be profitable, like what we're seeing with the Strait of Hormuz, you could potentially buy into a fraction of that specific oil load.
Absolutely. And the folks that are in charge of that oil load or the load on the ship more broadly can be much more specific when it comes to the costs, the risks, the obligations, um, and then at the same time, to your point about being more specific about your investment, this feeds really well into prediction markets also, which are now enabling. I don't, prediction markets right now are just a leisure slash recreational platform, but they are becoming so much more sophisticated in accuracy and in narrowness of investments or bets, if you want to call them that, much more so than our financial markets. And it is no surprise that the largest worldwide prediction market is also on the blockchain. And so I expect that we will have a proliferation of the use of uh, blockchain and tokenized assets over the next while. And to go back to your original point on this, we clearly have, excuse me, in the case of Paul Atkins, who is the head of the SEC, he's clearly pushing this. And I think without him, we would not be getting very far on this. It is clearly part of his agenda. He is getting it done quickly. I think he's out in front on this issue, which is amazing for a regulatory agency like the SEC, which usually plays from behind.
On the topic of Hormuz, Trump's blockade of the strait has American oil producers exporting more oil and at better margins than ever before. Do you think this was maybe always part of the plan?
I don't know about that. I don't want to get inside his head and what the plan is, but you know, one thing is clear that he has been saying clearly for a long time that he wants our producers to, in fact, maximize their production, our producers being domestic producers, to maximize their production. And there's clearly enough resources here to go ahead and maximize. Whether you agree with all of the, the ancillary, downside issues that are related to the industry, it's a side point. But at the same time, having now been in the oil and gas industry as an operator, plans are laid down not even in years, but usually in decades. Your commitment to a project is a multi-decade commitment. You're probably not going to recoup your investment for a bunch of years until after you start spending. And so for operators that many of them, especially the majors in this country, can go ahead and drill anywhere in the world. Even if the price is higher, and so therefore the top line is evocative or provocative, the cost structure is really what they get concerned about most. They can't foresee what the price of oil is going to be 3 years from now. It's really hard for them to tell, right? Closure of the Strait of Hormuz or whatever OPEC decides to go ahead and increase its production. So they're more focused on the lowest cost center to produce their oil, and offshore and Guyana and other places are much lower cost than here in the United States. But nevertheless, I still hope that in some ways we can go ahead and incentivize our producers to go ahead and commit to new projects here in the United States. We'll see what happens.
Speaking of measuring these projects in decades and not years, a couple analysts have said that in order for Venezuelan oil production to get kind of where we need it to be, they're expecting it would take 10 years and maybe a couple $100 billion. Do you think that this closure could have created a financial way for investment or expanded investment in Venezuela to become reasonable, or is it just too far out?
You know, something like Venezuela, remember, Trump's presidency is over at a certain point, and our posture towards Venezuela could totally change. I remember under Obama, we were talking about flights and tourism to Cuba, and that has never come to pass either. So making commitments to these countries that have been either on the sidelines or even totally out of the orbit for an extended period of time, and they've got fundamental issues, forget about their economy, but just fundamental issues with respect to leadership, where from a policy perspective, our leadership could totally be at odds with them and refuse to go ahead and engage. As somebody who's going to invest in something, I don't like that binary nature, right? I'm okay with how much am I going to be able to drill? Is it going to be, a couple of 100,000 barrels, a couple million barrels? But to know that it could totally go off like a light switch, that's not something you usually go ahead and invest in. And I just feel like it's too new with respect to Venezuela. There are lots of other places to go ahead and drill. I would not be the person who speculates on Venezuela. It is really, a tough road to hoe.
One of the theories about the Iran situation is that we were actually really trying to clip China's wings. And we are now recently resuming export of oil and gas trading to China. And I was wondering if you think that means that our strategy worked out.
I don't think our strategy worked out. I think it's a gigantic mess of a bunch of topics that float to the top of the priority list and sink from time to time between things like influence over other parts of the world, um, democracy versus other forms of government, certainly, the support of terrorism around the world, theft of IP, Taiwan, um, trade imbalances, strength of the yuan, artificial propping up of the yuan. I mean, there is just so much tied up between the world's two largest economies. And it's not just on economies that we battle with them, we battle with them on everything. It just so happens that we have a president right now that, economics and finance are the most important things. And Xi Jinping is happy to talk about those things if that's what's on the table and not human rights violations. But there is just a litany of stuff that I think will forever persist between the two of us. I don't expect there to be some glorious age where we see eye to eye with China. We just have to live in the tension of it and just try to be on the, I don't know, the better side of that tension at all times.
Our allies in Europe, Asia Pacific, and especially India are getting hit really hard from our intervention in Iran. And I was wondering what, in your mind, Washington might need to deliver in order for the victory, should there be one, to look like a shared victory and not just an American victory.
I don't think this administration cares about the optics on a shared victory. Um, I think this administration has its friends in the Middle East, which have already, despite the fact that they have disrupted the war has disrupted those economies, shaken them to their bones. They still have not lashed out at the U.S. administration, at our president, and therefore, whatever secondary disruption exists with Europe, I don't think Trump cares about that at all. He's already on the bad side, or they're on his bad side, with respect to all their policies, whether they be, green policies or whether they be immigration policies or otherwise. He doesn't like them anyway. And so I don't think he is looking to go ahead and deliver a particularly, sweet package to them at all. I think he thinks their greatest days are behind them. And he cares more about the Middle East, and he certainly cares about the Far East, right? Whether that be China, Japan, Russia, those are really, and Korea. That is where his focus is.
David, thank you so much for your time. Really enjoyed having you on here. Really
Pleasure
appreciate
was mine. Thank you so much.
it. Absolutely.